Most people hate tax time, but as real estate investors, this is an awesome time because you may be able to get a big refund if you're doing things right. And whether you're doing your own taxes this year or working with a tax advisor, these tips will help you to keep more of what you make. First, some people think lowering taxes are wrong, like you're cheating the government somehow. But in fact, the government incentivizes you with tax benefits. They want to make sure that you take advantage of them.
Yeah, so let's get started with tip number 1, maximizing your tax deductions. Ever hear how business owners have so many write-offs? Well, what many investors don't know is that as real estate investors ourselves, we are considered business owners in the eyes of the IRS. This means that almost all the business expenses can be deductible by an investor. So some of the most commonly missed items are business travel, business meals, use of a car, home office, education, right? So think BiggerPockets subscriptions, laptops, real estate books, maybe a book on tax strategies.
Or two.
And if you're planning on attending many of the awesome real estate conferences that might be coming up, make sure to keep all your receipts because the entire trip may be tax deductible. And here's a bonus tip. You do not need to have a legal entity to take these tax deductions.
All right, so tip number 2, using the right legal entities. Having the right legal entity can allow you to maximize your tax benefits, but having the wrong legal entity can cost you thousands of dollars and more in taxes each year. And unfortunately, we have to give the unpopular answer here, and that the right type of legal entity will depend on your unique situation. Yes, we get it that it's not the answer that most people want to hear, but it is the correct answer because everything is going to depend on your own facts and circumstances. LLCs are partnerships. You do not want to hold rental real estate in a corporation of any kind, like a C Corp or an S Corp, because that can highly limit your real estate tax benefits down the road.
Yes. All right. Tip number 3, have good records. Now that you know what tax deductions are, what the legitimate deductions are, you're able to take advantage of, make sure you have good systems in place to track those during the year. This is super important because if you're not taking those expenses and tracking them, odds are they will not be claimed on your tax return. And yes, you should keep receipts because they are your insurance policy if you're ever audited. And no, credit cards alone are not enough. But the good news is you don't really need to keep those tiny, tiny pieces of thin paper. Simply take a picture of them and file those away in a folder once a month when you're done. With respect to record keeping, there's not a specific app or software that will work for everyone. So find one that works for you that you can use it consistently throughout the year so you're not scrambling at tax time to try to remember what you spent money on last year.
Okay, tip number 4, don't forget your car and home office. These are probably one of the most common overlooked expenses for real estate investors. You know, obviously, most of us have a personal vehicle that we use for real estate or for our business, right? So keep in mind that you can take car-related expenses for the portion of the time that the vehicle is used for your real estate activities. And this is true whether or not you have a legal entity or not. It's also true regardless of whether title is held in your personal name or held in the name of a legal entity. You have a business, right? You have a real estate business. You have a dedicated space in your house you're using to manage your real estate activities. Make sure you're taking advantage of the home office deduction because it allows you to shift some expenses that are probably non-deductible stuff that you're paying personally, obviously, and convert those into deductible business expenses.
Yeah, and you can claim a home office regardless of whether you own your home or if you're just renting your primary home. Okay, tip number 5, having the right team. Saving taxes is a team sport. So make sure you're working with the right tax advisors who can help you not just with filing tax returns, but planning ahead on how you can legitimately save on taxes in the coming years. Your advisor should be someone who speaks with you to identify planning areas and checking for tax saving opportunities. If you're the one doing research and bringing them the tax strategies, then it might be time for you to upgrade your team.
So there we have it, 5 tax tips on how to pay the least amount of taxes this year. Please be sure to like, comment, and subscribe below. And don't forget to check out our books at BiggerPockets.com.
And if you want more tax strategies, visit KeystoneCPA.com.